Compass Mining is your trusted partner in Bitcoin mining. Whether you're investing in one machine or thousands, our customizable solutions are tailored to meet your needs. We are your experts in Bitcoin mining, offering a platform where individuals and businesses can purchase hardware, host machines, and access a range of ancillary Bitcoin mining services. We also specialize in large-scale site development and data center operations. Discover more at compassmining.io and see how we can power your success today. Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. As you can see, a little bit different background this week. That's because Anthony Power and I are both down in Florida, Fort Lauderdale for Mining Disrupt. We could not be more excited, and we wanted to jump on a quick podcast to cover the day's news. Before we get into it, take a second, hit the like button, you guys. Feel free to subscribe, and with that being said, let's get into today's video. Okay guys, so that's right, Monday afternoon. This is the day we've been waiting for here, Anthony. Bitcoin has broken out of that range, surpassing 85, 86, 87, and now 88,000 today. And boy, have the miners followed suit. We've got some of the Bitcoin miners up double digits today, nearing in on a 20% daily return.
Been a great day, and it's been long overdue. We've had a couple of nice days over the weekend with the Bitcoin price starting that move upwards, and yeah, early today reached 88,500, and it's hovering around very close at the moment. Mining stocks themselves have done very well today, and we've talked about volatility of Bitcoin. So Bitcoin's literally only up a couple of percent today, but the mining stocks, well, we can give you a few of the leaders in the pack at the moment. CleanSpark up 19%, Marathon close to 18%, Bitdeer over 16%, DMG's having a great day, 11%, CIFR at 10%. So across the board, all green. And yeah, we've been waiting. So bear in mind, we've talked about the fall over the last 2 or 3 months. A lot of people left the space in terms of investors. Quite a few. We covered a few of the tweets last week. People have been selling their positions, and really, it's not for the faint-hearted. We've said that all along. This is not something that you can just hope to invest in and turn rich in a few quarters. I've been in this space for 5 years now, and it's challenging. It's all about timing. Last year was very good for timing for me. Not so good in 2025. Ever the optimist, hopeful, still waiting for that bad news story to come through, because everything seems possible on Bitcoin at the moment.
Well, that's exactly it, Anthony. And we've been talking about this. This is the only investment I've had in my life where I've not lost confidence, even on those big drawdown days. And we talk about the volatility. It's one thing to talk about it. It's another to live it. And it's very difficult your first cycle, seeing your portfolio go down 10, 15, 20% in a day and not doing anything about it. That's the most difficult thing in investing, is just staying still and not making a knee-jerk reaction. Now, I said in the intro, Anthony, you and I are down in Fort Lauderdale, Florida. We were just down at the pool. We got some sun today. The conference starts tomorrow, but we wanted to jump on the podcast, give a quick update on a few topical items, including difficulty, the miner performance today, and obviously some news. So with that being said, we'll get into the main event here. I think the biggest highlight over the weekend, Anthony, was Michael Saylor, our good friend over at Strategy, has resumed buying. Now, we've heard that he's trying to get around $21 billion together for a massive buy. Today, they came out posting his legendary Bitcoin tracker once again, saying it looks like we need a little bit more orange, and lo and behold, they're out purchasing once again.
Yeah, he's been consistently buying. On behalf, obviously, the company been buying, on behalf of the shareholders. And, at the moment, over $42 billion of Bitcoin's been purchased over that period, all the way back from 2020. So, in terms of public organizations that hold Bitcoin on the balance sheet, nobody can compete with the likes of Strategy at the moment. Last time I looked, it was 499,200, but we're going to help you with an announcement today that he's got them purchased a bit more.
Yeah, just incredible. If you think about owning 2% of potentially the future global money supply, just incredible. We were talking about this earlier, Anthony, the decentralized component of Bitcoin. It's important to remember MicroStrategy, the ETFs, these are not owned by a single individual. This is owned by the shareholders, by the investors. So, although these companies own a lot of Bitcoin, still somewhat diversified in terms of the holders. Now, the other big news, Anthony, and a personal connection for you, Max Kaiser put out a tweet last night talking about the IMF, or the International Monetary Fund, now starting to recognize Bitcoin as de facto digital gold. Now, this is interesting because El Salvador just squared up their debt with the IMF using Bitcoin, and this is yet another domino to fall in this global adoption.
Yeah, so again, another positive news story. IMF adding Bitcoin to reserves, and following suit from America's interest in, they've created a strategic Bitcoin reserve, and the IMF looking to have something similar in their arsenal. Another big organization buying Bitcoin and using it in the same way the US has highlighted they want to create this strategic Bitcoin reserve. Just one positive news story after another.
Yeah, it's just incredible. Now, you sat with Max Kaiser on an international flight. You got to talk with him quite a bit. This is an OG in the space, obviously a huge name. He was down in El Salvador meeting with the president, Michael Saylor. What do you feel this adoption is really doing to the billionaire community, Anthony? We're down here, we're looking at the yachts, we're looking at all the money in Florida. It seems as though some of these bigwigs are starting to come around to the fact that Bitcoin may be a viable alternative.
Yeah, I still think we're still a little away from that type of level of adoption. There's obviously a lot of people, ordinary people in America who have crypto, but I still speak to people, and they're still, looking at gold rather than Bitcoin as something of an asset class there. So we still got a way to go, but these stories today just put Bitcoin more and more in the spotlight, and it's just a case of not if, but when these billionaires start jumping in and realizing they better be inside and own Bitcoin than be outside.
Well, that's just it. And we've heard from many people it's riskier not having exposure to Bitcoin than having exposure at this point. Now, another couple positive press releases here, Anthony. Metaplanet just had their AGM, or annual general meeting of shareholders. We see David Bailey was there. So he's the creator behind Bitcoin Magazine, the Bitcoin Conference. We were fortunate to run into him at PubKey in New York, actually. But you can tell by the turnout here, over 1,000 individuals in the room. Yet again, another example of Bitcoin going beyond borders.
Yeah, absolutely. And in the photograph, you can see him there on the stage with Dylan Leclerc, who we've met at various conferences, Nashville last year and Amsterdam. I've seen Dylan last two Amsterdam conferences. Again, regular speakers, lots of followers. And yeah, David Bailey, we got to meet and speak with him at PubKey, and really nice guy. And looking to meet him again at Nashville this year, where I'm be one of the speakers at that conference.
Yeah, it should be great. We've got two speaking events each coming up this week as well. Now, because we're in the States, we did want to provide an update on the state level Bitcoin strategic reserve as well. You can see here a total of 91 Bitcoin bills have been pushed forward to Congress this year, 39 strategic Bitcoin reserve bills, and 33 of these are still considered live SBRs spread across 19 states. So you can see this orange tide really just taking over the United States of America.
Yeah, and hopefully we'll get the first state to announce they've gone through the whole process and the approvals that need to be carried out as well. And I then foresee a bit of a domino effect as one state gets through that process. We'll see other states follow suit there, but that's a bullish picture there of orange for those states that are going through the process. 33 live SBRs across 19 states. That's a lot bullish from where we were, even 12 months ago.
Yeah, no kidding. And like you say, we just need that first domino to fall, which it feels like today in the market was almost that first breakout of that range we've talked about over the last few weeks. Now, we want to provide balanced outlook on the channel. Obviously, there was a little bit of negative news for the miners in the form of a difficulty adjustment. So this is something you've talked about extensively this year on the channel, Anthony, relating it essentially to a second halving in 2024. Now, we saw the Bitcoin difficulty go up, I think 1.3%. So it's not substantial, but you can see from these charts, one's a 3 month, one's a 12 month. Difficulty, the vast majority of these adjustments continues to go up, making it harder and harder on the Bitcoin mining stocks.
Yes, and yeah, the adjustment was at 1.43 yesterday. So again, it's taken away a small amount of production for these miners, and effectively the global hash rate continues to increase. We've seen that with obviously the Bitcoin price rallying to its all-time high in January, and the expectation, if you listen to half the analysts in the space who believe, and some really big names in these analysts there, the Kathy Woods and the Mike Novogratz and Van X and, a number of others have clearly stated they expect Bitcoin to get, 250,000 even by the end of 2025. So you could argue that there may be miners out there that are mining maybe a loss at the moment on the anticipation that when Bitcoin price increases, and that Bitcoin price increase will be a positive margin for these miners to acquire from a future perspective. So, I spoke to miners back in 2022 when a lot of them were curtailing when power prices were high, Bitcoin price was low, and I said, do you believe you should be mining in these periods now because of the expectation of Bitcoin price? And a lot of the public miners said, no, we'll switch off when it's not profitable to mine. And that clearly happened then. So, this could be miners in areas where the power is extremely cheap or even free to a certain extent, because that's the way in the future it's going to happen. I mean, even in America, which is deemed to be some of the cheapest energy rates globally, we know some of the miners are getting circa, between 2.5, 3 cents a kilowatt hour at the very low levels. And we know some of the miners that are paying 7 cents. Now, in Europe, that can't happen. The energy prices are too high. But in countries like maybe Africa and other countries around the world, maybe some of the Eastern European countries, maybe some of the Russian states, they may be using, cheaper power available. And it might be that you have some of the big energy companies starting to utilize some of their excess power and direct it towards Bitcoin mining. That could also be a reason for this continued upward trend in difficulty. And you're quite right. We had a halving last year, but you can look at the difficulty between January last year and where we are today, and that's really effectively another halving for the miners, and not one that was really anticipated. I mean, we asked, the miners at the start of the year where they think the global hash rate is, and year after year, many a mining executive has got it, nowhere near where the Bitcoin global hash rate ends up. And so in terms of growing, it's been fairly relentless. And we thought we'd see a bit of an easing, but the global hash rate at the moment, 7-day average is over 800. And clearly these charts here, provided by Luxor, just show you that continued upward trend in difficulty for the miners and making it challenging them to get a reasonable production to produce a margin.
Compass Mining makes Bitcoin mining accessible to everyone. Start mining in as little as 48 hours with our turnkey hardware, online and mining directly to your Bitcoin wallet within 2 business days. Find out more at compassmining.io and get started now. Yeah, it's a good point you bring up, Anthony. Now, I have a 12-month here as well. I've highlighted one of the bars. You can see it's a 10% difficulty adjustment. So my question to you is, obviously, Bitcoin price, global hash rate, difficulty are all very interconnected. If we start to see Bitcoin spiking again up over 100, 125, 150, what is your expectation on global hash rate? I would assume we would continue to see more and more computers, ASICs plugged in, more profitability, and in turn, difficulty would increase. Is that correct?
Yeah, as the global hash rate, as the global price increases, or hash price, as people like to call it, that will mean, you start seeing slightly less efficient miners will be able to produce a margin. So at the moment, predominantly the most efficient miners are the ones that are on the network. So you won't have anything lower than S19s or equivalents on the network. And really, the S19J Pros that can make slim pickings in terms of margin. But if the hash price increases significantly, then you might see other less efficient miners come back onto the market, especially if there are areas where the power price is extremely low. So you need, two parts of the equation. You need cheap power and really efficient mining machines. If you've got slightly, reasonably good efficient mining machines, you can probably get away with plugging them in where you've got really low power and make a margin, but you cannot plug less efficient miners in when the price of energy is high, because that's your biggest cost. So you're competing then, the price would have to significantly rise. And as we found before, when the hash price increases, the global hash rate increases as well. So there is a correlation between those two.
Yeah, there certainly is. Now, you talk about cheap access to power and efficient fleets. We've talked about some of the percentage returns on the individual miners. Only one piece of miner-specific news out today in relation to Riot and Rhodium. So I'll let you talk through that one, Anthony, but an interesting development and nice to finally put this one to bed for Riot.
Yeah, so Rhodium, just for those that aren't aware, Rhodium were one of the three large hosted clients at the Winstone facility in Rockdale. So when Riot purchased that facility, they were an existing client, along with a couple of other, fairly sizable clients. I think Rhodium, certainly at one point, were about 3 exahash. So you could argue, even as a non-public miner, slightly bigger than some of the public miners out there in terms of hash rate. And bear in mind, they had 3 exahash, 2 or 3 years ago, even probably when the likes of CleanSpark was probably around that era, or even IREN were less than 3 exahash. So they're a big non-public miner. They had access to cheap fixed price energy at the Rockdale facility, and then when energy prices started to spike, it really caused a problem then, because obviously Riot had taken over the facility, and they were having to pay the higher energy costs, and they weren't able to pass those through as you'd normally expect in a contract, because Rockdale had a sort of a fixed contract with the previous provider. There was some litigation, and I believe that Riot had asked not just Rhodium, but a number of other hosted miners out to give them notice on leaving the facility. And I think this went through a bit of litigation. Well, today or on Friday, Riot announced that they've entered into a non-binding term sheet to actually acquire certain assets of Rhodium as part of a settlement agreement. And so, Rhodium will have obviously all their mining machines at the Rockdale facility. The miners there will become part of Riot's platforms fleet. In exchange for that, and exchange for the notice to physically the company to leave, Riot have made an offer of 129.9 million in cash, an additional 6.1 million to return Rhodium's power security deposit, and a further 49 million in Riot shares, which are going to be priced on the last 10 trading days, volume weighted average, prior to the actual closing of the transaction. So, close to where the price was probably, in that last week before Friday. So, average there probably in the region of maybe, $7 to $8 per share. And that will then give effectively Riot the access to 125 megawatts of power at Rockdale for them to utilize however they wish to. Now, we know the Rockdale facility has always been a Bitcoin mining site, and it looks likely it will remain a Bitcoin mining site. But what it means is it means that Riot themselves can focus on filling that facility with miners. They may use some of the Rhodium miners. We're not told what sort of breakdown efficiency the fleet is, but we know that Riot have some significant orders with MicroBT, and they may be looking to bring in more miners into that facility to increase their hash rate there, whereas they look at Corsican, the remaining 600 megawatts at that site, to be utilized for high performance computing, and in a sort of a hosting contract there. So target plan was 38 exahash by the end of this year. Having now purchased that additional power from Rhodium, it might be an opportunity for them to, even to increase that, because 125 megawatts of the most efficient miners would probably give them somewhere in the region of 5 or 6 exahash more in terms of hash rate. So it could see Riot, if they were to fill those extra megawatts with machines, get well over the 40 exahash at the same time growing this potential sizable HPC business.
Yeah, great announcement right at the perfect time as Bitcoin starts to rally. So I mentioned in the intro, Anthony, we're down in Fort Lauderdale. Mining Disrupt starts tomorrow, which should be great. We've got 2 speaking commitments each. Tomorrow night, we're headed off to the BitGo party, which is great. We met up with them in New York as well. Also, the Mining Mafia party at the Renaissance Hotel just next door. So if you guys are in the area, you're going to the party tomorrow, make sure you stop by, say hi to us. We've also got a Seal Miner party with Bitdeer the following night. So looking forward to connecting with the subscribers, with the companies down here. We'll be sure to take a bunch of pictures and videos during our conference time. Anthony, with that being said, I'll give you closing thoughts here, but a great start to the week for the miners, for Bitcoin, and obviously for us being down in Florida.
Yeah, I think closing thoughts have to be with Michael Saylor. Just when you think he's got enough Bitcoin already for Strategy, the company he's the chairman of, he goes out and buys another 6,911 Bitcoin, at an average price of about 84,529. So in terms of today's price, a nice little discount there. My only concern now is, where does it stop? Because he's now got 2% of all the Bitcoin that's ever going to produce. He's very keen to continue to grow that. Obviously, the shareholders of Strategy benefit in the long run, because they're going to be the ones that have, got a stake in that Bitcoin on the balance sheet. But another positive update for the Bitcoin community. We like when Michael Saylor buys Bitcoin, because it means that he's still very much a bull in the space. And when you've had the sort of last 2 or 3 months of uncertainty, and many people, who were sort of previously bullish in the space starting to show feelings of, that they may be in a quite a challenging position with regards to, they've got some mining stocks, they've got some Bitcoin, hasn't been doing as well. These sort of updates from Michael Saylor put a little bit more of a wind in the sails, and something we look forward to on a regular basis.
Yeah, you're certainly right about that. We often talk about the fixed cap of 21 million Bitcoin, but when you take out the Satoshi wallet of nearly 1 million, you take out BlackRock, you take out some of the ETFs, MicroStrategy or now Strategy, that number is quickly dwindling, Anthony. So as we said earlier, I think at this point, you guys, there's more risk not being involved in Bitcoin than being involved. Time will tell. We're feeling great to start the week, and hopefully this continues. Let us know in the comment section below if you're going to be down here for the conference this week, how you're feeling about the miners, and if you managed to average down during the volatility over the last few weeks. Hit the like button. Feel free to subscribe. We'll see you back here tomorrow.